precious metals are getting more precious. But why? Gold prices have been soaring to record highs after jumping above $1,500 an ounce for the first time yesterday. It's trading at above $1,500 today. Take a look at that trajectory, the blue line going up. Now look at the dollar. That's the one going flatlining and going down. Now when we talk about precious metals, copper has also risen, silver has surged, and you see the dollar, it's falling to multi-year lows. So what is this about? Is this about the decline in the U.S. greenback? The global reserve currency, not to mention? Well, joining me for more is Charles Goyette. He's author of this New York Times best-selling book, The Dollar Meltdown. I think I have an idea of what he's going to think. So, Mr. Goyette, what do you think is going on with gold? Is it surging this high as a result of concern over the U.S. dollar?
Well, you could say that, but the truth is that the value of gold is more or less holding steady. And it's the value of paper currencies that are not denominated in gold that is falling. So the purchasing power of gold over the long period will stay more or less the same, but the purchasing power of the dollar, as you know from filling up your gas tank, and as you know from going to the grocery store, the purchasing power of the U.S. dollar is falling, as are all the paper currencies of the world.
Aside from the purchasing power, what about concern with investors, with central banks, with governments over the dollar? Is that reflected in the rise in gold in comparison to the fall of the dollar?
It's very clear that the Republicans and Democrats in Washington are not equal to the challenges ahead of us. They cannot solve the problem, and so economic events, macroeconomic events, are in the driver's seat, and this thing will unfold in a very unfortunate manner because, you get, for example, the Ryan plan about balancing the budget here in the United States. They're talking about balancing the budget 26 years down the road, 26 years. So none of this stuff is serious. Even Rand Paul came up with a proposal to cut $500 billion from annual spending, would still leave this country with a $1.1 trillion deficit. So none of these proposals, nobody in Washington seems to really understand the scope of the problem. And the U.S. dollar is getting squeezed now, not only internationally, as you mentioned, the reserve currency of the world. You've got central banks around the world that are disinvesting from the dollar, bilateral, multilateral agreements to get trade out of the dollar and into their currencies. At the same time, domestically, there is a movement afoot in several of the states across the land to do something to protect the state citizens against the dollar's demise and to remonetize gold and silver. We had a law passed in the state of Utah to that effect just recently. So the events are afoot.
We do see the circumvention of the dollar even just recently with the BRICS, the largest emerging countries meeting to work out trade deals in their own currency. It's certainly a trend, but what really is going to be the tipping point? Because still, you don't see any kind of mass movement to replace the dollar as the reserve currency. So how realistic is that as an outcome?
Yeah, it's actually happening before our very eyes. I mean, we saw things, I think it was a year or so ago, the Central Bank of India, which normally these central banks hold dollars as the reserve currency and issue their own currencies against their dollar holdings. The Central Bank of India, just as an example, just hoarded 200 metric tons of gold. I mean, I beg your pardon, of worth of dollars to replace it with gold. Let me give you a better example here in the United States. University of Texas has one of the largest academic endowments in the world, and they now own $1 billion worth of gold. Well, these gold-line endowments never used to think about touching something like gold. But even what's more important, the university has decided not to leave its gold in the institutions, in the depository, in the commodity exchange, but to actually take physical delivery of it. And this is a trend that is going on around the country. Counterparty risk, government risk, more has people concerned around the world. So it seems like it's in slow motion maybe, but if you fast forward a couple of years, the dollar will look very, very different.
So fast forward a couple of years, what do you see in a couple of years? Will the dollar no longer be the reserve currency, or is this going to be much longer term?
Yeah, and I've written about this in my book, The Dollar Meltdown, because, the foreign central bankers understand this. The dollar will not last as the reserve currency of the world. Those days are over. And, Timothy Geithner goes to China, and he tells Beijing University students, no, the dollar's fine, everything's fine, and they laughed at him. But here the other day, as you know, Standard & Poor's gives a negative prognosis on America's AAA bond rating, And nobody in the United States really seems to understand the impact of what's going on. So the central bankers of the world know what's going on. The American people are the ones that will be victimized by this, and those are the people for whom I've written this book so they can protect themselves from this government.
Okay. Let me play devil's advocate for a second, though. The Standard & Poor negative outlook. There's a lot of people arguing that that was political. That was to get Washington to deal with its deficits. That's one argument. Another issue is that it wasn't a downgrade. The U.S. has a AAA credit rating and is still considered the risk-free asset in financial models for many people the world over. So what really is at stake here? The U.S. has not been downgraded. Even Japan has been downgraded, and they were doing just fine selling their treasuries after that.
Well, let me give you the real answer that my friends in the financial community and I use. This is the real answer we use behind the scenes.
All right.
By the time Standard & Poor's gets it, it's too late. It's way too late. So Standard & Poor's, we don't need Standard & Poor's to tell us that the United States has $100 trillion in unfunded liability, and there is no mechanism whatsoever by which those obligations can be paid.
Okay.
This is just hard, fast accounting.
Right. But let me ask you this. As long as the U.S. is the global reserve currency, can just print its way out of debt, is this an issue? The U.S. can continue to run these debts and deficits as long as the dollar is the reserve currency.
No, they really can't, because nobody is forced to keep the dollar as the reserve currency. Look, right now, today, the Federal Reserve is now, this is news, the Federal Reserve is now the largest holder of U.S. government debt. It used to be Japan, used to be China. Now it's the Federal Reserve. Well, when China buys U.S. government debt, they do so, they use real resources, real stuff, to make real things at the cost of real labor, to sell to us, to earn money, to buy our debt, to fund our debts. When the Federal Reserve, now the largest holder of United States government debt, when it buys that debt, it does so with money that didn't exist that morning. It just made it up. The rest of the world sees this. They're not obligated to keep funding our debts or to keep holding U.S. dollars. Nobody has to do it.
But yet they still are.
Well, I mean, they are today, but, it's like 5 or 6 guys standing around a room looking at the exit trying to, nobody wants to spook the other 5 and be the first one out the door. But, I mean, this is going, look, here's what happens. When it becomes difficult for the U.S. government to fund its debt, it starts offering higher returns. Interest rates go up. That kills the domestic economy. It kills any sense of a recovery. But the government is not like you and me. When you buy your Lamborghini, you have to look at the interest payment and you think, well, okay, I can afford a Lamborghini. I'm a well-paid news anchor, and I get it. But it doesn't matter to the government. The government has to borrow the money at any interest rate. And you will note that all of these projections about the budget of the United States going forward, the deficit going forward, whether from the Republican camp or the Democratic camp, all of these projections come with this rosy scenario about interest rates staying down here forever. It's just not happening.
Well, in simple, looking at the technical chart, interest rates are due for a correction if you just look at historical rates. But I want to ask you, how much do you blame the Federal Reserve for what's happened with the dollar? They have been having a massive debt buyback program, as you mentioned, with quantitative easing over the last 2 years. It was under the radar at first, but now it's pretty well widely known about and publicized. How much do you think that that's responsible for what's going on?
The Federal Reserve has destroyed 96 or 97%. Now think about this. They have destroyed 96 or 97% of the dollar's purchasing power in the less than 100 years that they've been around. I mean, if you had a family company your great-grandfather started and he handed it to you, and you had managers that turned it over to you today and it was worth 3% of what it was when the company was created, you'd fire them. And we keep these same guys in charge. They have not solved the problem since the mortgage meltdown. They have passed the buck to the American people, and we will all see higher prices at the grocery store and at the gas station and so on to pay for the errors and the money printing of the Federal Reserve. We have a really, I hate to say it, we have kind of a grim period ahead of us.
Not a rosy picture, but I want to thank you for painting it. That was Charles Goyette, author of the New York Times bestselling book, The Dollar Meltdown.